So the question is, should I take money out of my 401k to use as a down payment to purchase a home? 401ks are one of the best investments that you can make in your future. It's money that you're saving and will grow, will earn interest. It's difficult to get to, so it's hard to take money back out without severe penalties. So it's really one of the best savings plans and investment earnings plans that we have today as U.S. citizens. 401k is money that you put in to an investment account. Oftentimes it's matched by your employer at some level, and so you're not only saving your own money, but your employer is putting money in there as well. The money that they put in becomes vested over some period of time, which just means it becomes your money even if you leave the company. So you have this vehicle where you're saving money, that money is growing, other people may be contributing to that money, it's growing even more, and you're wondering, should I take that money out and use it to purchase a home? Well, from a financial standpoint, there are several things to consider. Number one, which is going to grow faster? Is it going to be the interest and the money that you earn on your 401k, or is it going to be the value of your home? Both of those contribute to your net worth. If you have more money in your 401k, that's all money that you're worth. If you have equity in your home, that's considered part of your net worth. So the question becomes, which of those increases at such a pace that it's going to be the best investment? And this is a difficult question to answer because it depends on a lot of things, like how much money are you earning on your 401k? Are you getting a good return? Is the economy going to continue to improve your investments? Remember, in a home that you own, you have equity building as your house appreciates in value. You also have equity building as you pay down your mortgage each month. Borrowing money from a 401k to make a bigger down payment, like let's say a 20% down payment, can save you money on a monthly basis. Since you're borrowing less, your payment is going to be less. Additionally, if you're putting 20% down, depending on the loan program, you might not have to pay any additional mortgage insurance. So there can be a value in taking from one side and using it into the other. Now, let's talk about the process of borrowing money through your 401k. There's two ways to access your 401k money. One is through a loan, and the other is through taking the money out, or a withdrawal. And there are different tax consequences for both of these, and all 401ks are built differently. So you need to talk with your 401k provider to see what is even possible. Typically, in a 401k, I can withdraw money if it's for the purpose of purchasing a home at some level without paying penalties and fees. But I can't guarantee you that that's going to be the case. You have to talk with whoever services your 401k or your HR department to find out if that's an option for you. If it is, you can take that money out. You don't have to pay fees on it. You might have to pay taxes on it, but you don't have to pay fees on it. Then you can use that money as down payment to purchase a home, which we think is now going to go up in financial value. What's option number two with your 401k? You can borrow against your 401k. Sometimes. Remember, if you've left a company and they're managing your 401k, you're probably not going to be able to borrow against that 401k. But if you're still there, there may be some guidelines under which you can borrow money from that 401k. So what's the difference in borrowing it versus withdrawing it? Well, if you're withdrawing that money, the money is no longer in the program and it's no longer earning interest. If you're borrowing the money is still there and you're earning interest. It's just you might actually be paying a little interest for the money that you borrowed against. Again, you have to talk to your 401k plan. So there's a lot of variables that go into this. I typically tell people you really need to think hard about withdrawing money or borrowing money from a 401k and putting it into a house. You need to talk with a financial planner, you need to talk with your plan administrator, and you need to find out if those things are going to be possible. Most importantly, the timing of borrowing or withdrawing on a 401k can be very different than other types of down payments. If you're getting gift funds from mom and dad, they might already have the money. If you have the money in the bank, it's there and you can access it at any point. But if you're getting it from a 401k, there's a delay in how quickly you can get that money. So if you're thinking about borrowing or withdrawing money from your 401k to make a down payment on a new house, you need to start those conversations immediately. You need to have those conversations well in advance of writing a contract. You might even want to withdraw that money as soon as you've got the contract, because there can be a delay in when you request that money and when you physically have the money in hand. So am I telling you, yes, it makes sense, or no, it doesn't make sense to use your 401k as a down payment to purchase a home? No. What I'm telling you is there are situations where this may give you access to cash that you wouldn't otherwise have, and we know the cost of home ownership is cheaper than the cost of renting. So if you don't have enough savings and you don't have anyone willing to gift you the money and you're required to use a program that requires a down payment, then it may totally make sense to borrow or withdraw money from your 401k to put it down on the purchase of a new home. That's a lot of questions that I asked you, and you need to talk with a professional about them. I would encourage you to talk with 3 different professionals. Number 1, I'd love to have a conversation with you about it. Call your friendly mortgage guy and let him talk to you in more detail about what your questions are. That's going to lead to conversation number 2, which is with your 401k plan administrator or your HR department. Somebody that can tell you, what options do I personally have with my individual plan? And then number 3 is your financial planner. If you don't have a financial planner, we have a network of financial planners that we love to recommend. We'd be happy to connect you with them. So if you're thinking about 401k, you're thinking about house, or you're thinking about house and you just don't have a down payment, but you do have a 401k, text me, call me, or DM me 401k, and I'll be happy to start the conversation with you.